for the Euro USD. Okay. No, no, we've got no so sort of just moving into these zones, right, up and down. No, this would have been your. What does this ST means?
Oh, second touch.
Okay, so the second touch, right? So you're gonna be buying there, yeah.
Yeah.
But when I say second touch, right, I mean second touch meaning it needs to go and touch the supply and demand zones.
Okay.
Yeah, but also what I'll do is by the end of the course, for all this, for every single market that you guys are trading, I will do a supply and demand zones for you so that it's all consistent and it's the same with what I've got. So therefore, if you find a trading signal, then and then you put it in the WhatsApp group and you say, Marlon, I'm about to take this trade. Have a look, please. Then we'll have the same thing. But then what I'm hoping is that you would have probably sort of look at what I've provided for you and look at you doing it yourself and the fact that you're only trading, six, seven markets, then it wouldn't be a big deal for you to then go back and, so draw yours and compare it with mine's. Because what we want to have that consistency really. Yeah.
Mm-hmm.
Um,
Yeah.
so, and this is the lower high and higher. Now, for this bit though, this is just a range bound, okay?
Okay,
However,
so does that mean that we don't identify the lows and the highs in the
uh,
range band?
no, no, well, we want to identify the range, so we want to sell up there and want to buy down there.
Okay, so where my arrows where I've sold and bought, are they in the right place
Yeah,
or
they're
no?
okay. They're okay. It's just that I would
Okay.
more likely, my target I wouldn't probably take these here. Can you see where I'm pointing?
Yeah, the low where I'll
Yeah,
put lower high.
yeah. I would take it if it was up there because I want to see it cause actually come. I know it's not going to be exact, but this is a region that I would want to. And also the fact, where you see this big engulfing, this sort of big not engulfing, but a bearish pin bar here. That
Hmm.
candle there, because it would have been eating up into my profit already. You see, so that probably wouldn't be a trade that I probably want to take there. No, so just mindful that you want to see like here now the market it goes up, pull back, goes up, pull back. You want to see that up motion, that pullback, or that down motion and pullback, that down motion and pullback. That's when we're going to get our lower highs and our lower lows. Yeah,
Okay, so kind of like with this range bound,
yeah,
the the supply and demand zones are too close together for us to kind of get
yeah,
those ups and downs.
yeah.
Right.
And then here now we look yeah. So therefore the market break down, pull back. That's fine. Break down, pull back. So that's the lowest low. Then the market then break above all of these now. So it break up to this point. Now, what I would have wanted to see here now is that the market either pull back to this zone here, which it did, gave me an engulfing and a pin bar. I'll probably be taking this trade for it to go back up. So I'll be looking to buy there if, because I would have had a signal there. But unfortunately, that didn't work out. But anyway, the market just dropped. Okay, all the way down. But let's look at this now. So the market break down. Yeah, it dropped all the way down and pull back up to there. Now, this is what the market did. The market break up to this zone, pull back there, break up. Now this is almost like my reversal trade now. So I'll be looking to sell there. And especially with a really nice confirmation there. Yeah. Where the market now
Yeah.
gave me that inside double top sort of thing. So I've got a top there, pull back, a top there. Yeah, and roughly on the same sort of thing. Okay. Now I'm sort of wary with your supply and demand zones there. But at the end of the day, I'm working with the lines that you've got, the horizontal lines that you've got on the chart. Which chart is this one,
So
by the way? Which one?
when you said this one is, let me have a look. So when you said that you were it, you think
Is
that
this?
they're not correct.
Well, I'm gonna look at mine shortly to see how mine compares to yours.
So this is the UK 100.
Okay, so the UK 100. Okay, so So this is the no, this one here that I'm on now is, you're saying this is, isn't this the Euro USD?
No, because I put them on separate pages, and so underneath that second chart, there's actually text underneath there that you can't see, which explains what
Okay.
I've done.
Okay.
Kind of, yeah. So that one's the UK 100.
Okay. Right. Okay. So let's go up to this one here now. So here now, so you said this one is the UK 100, right? So let me
UK
look at the UK
100.
100 on mine and see. Okay. Uh, okay. Okay. So let me look at my UK 100. Okay. This UK 100. Um, UK 100 on mines. I've got a number of um turnaround points. And if you notice here, right, this trade here, what I did was I put in a sell trade here because what has happened, the market dropped all the way down to here, pull back up to there. Okay. Now the pullback there with a basically with a engulfing candle, could have sold there, or when the market break down to here and pull back to this zone with an engulfing candle, I could have sold there. Okay. Breaking it down all the way down to this zone. Okay. No, I probably wouldn't have bought, but then this is what I wanted to say. No, because this is a low, I would have wanted the market to break above this bit, this low, right? Because this is a high, this is a high, this is a lower high. Yeah, but this low is not lower than this one, but that we've got lower highs, right? Okay. So what I wanted to see was this low that was there. I wanted to see the market break above it, right? And then pull back down to say this zone here, and then look for a buy. So that was what I was looking for. Now, when I got this engulfing here, because I put my entry approximately there, right? I wasn't triggered into I wasn't triggered into this trade. I wasn't triggered into this trade. I wasn't triggered into this trade. So basically, so I sort of missed out. But then, I missed out from losing because this would have been a losing trade if I'd just gone into the trade. That's the reason why I let the trade come to me rather than jump in, even though I got a really nice engulfing at a zone where the market sort of turn around. So the market then basically dropped down, right? Then I'm looking here, say, okay. So I was saying if the market then pulls back down to this zone here, then I'm looking to buy and get in. But that didn't happen. The market then just carried on, it's carried on, it's carried on ever since. No, what I was looking for, yet again, if it comes back here, right, then I'm looking to sell. Engulfing, um, didn't take that one. Because everywhere on my chart, every time you see a vertical line, it means that I took a trade at that point. Okay, because I highlight all of these points. So therefore, when I look back in the future, I can see all the trades. Now, this zone here is a major zone. Now, if I can get a market where the market breaks down slightly, then come back where the bulls and the bears are fighting, then I'm going to be looking to sell at that zone. Now, let's show the trade that I currently I'm looking to get into the this one here, which is the ASX SP index. It's an indices market. I've got the engulfing, I've got a pin bar, and I see the market sort of rattling around here where the bulls and bears are fighting. Now the bulls bears are thinking that this is not, it's not that expensive. The bears are thinking no, the the bears wanted to go down, the bulls wants to go up, and there's a fight between the both people, and then one person is going to win at some point. Okay, now let's show you a trade that I close out, which reached my profit target today. Okay, um, this one was a really nice trade. This one here. Okay, so if you notice, breaks down, pull back, yeah, and this is what we call now the double top trade. And a really nice one because look, I got the pin bar, I got into this one, went down, my target was about there, right? Okay, and what happened, right? It got made profit on this one. I made nearly £180 on this one. Okay,
So I
so
can't see. So I can't see where the double top is.
you see here now, this is where we are there, right? And this is where I got yeah. So I already pre-plan. I always pre-plan the trade. Now, if I didn't put this on this chart, then I wouldn't have taken the trade. Right now,
But it doesn't go back up to the same point at the supply zone.
yeah, but it's not going to be exact. And also, but then what is it if this? Let me show you what would have happened then. You see, if the market then did this, if the market had come and just carried on all the way up to there, then I
Mhm.
probably wouldn't want to take that one. If the market came up to this point, right, and this was where the candles were compared to that one, I don't want that trade because then this market is then pushing higher, making higher highs. So I would be scared to take that one. However, if the market then sort of is it either has to be exact to this one, to where it was before, yeah, either exact to it, just slightly over. But if it's a major above, then I'm not taking it. Let me show you which one I've got lucky on. This is another trade I took, right? Here now, I took this one, and because it was at this demand zone, okay? Now I took this one here as a speculative trade now. I was looking, I'll put that this is where I'm going to take the trade because this was what I was expecting mark to break down, pull back up to the zone. Now it went up nicely up above that. Okay, so this one went way above that one, which I typically wouldn't take. Let's make it a bit smaller so you can see. But then because what I sort of prompted me and give me a bit more conviction was the fact that in the past it got up to their turnaround, got up to their turnaround, got up to their turnaround, got up to their, you see what I'm saying? So I took this one, I only put my profit target there. So to be honest, I felt gutted because look at all this profit left on the table, 550 pips. If I'd say bet a pound, that would have been 550 pounds in 12 days. I'm here now, so I only made, I think this one was at what, 187 pounds I made only, and left all the rest of the money on the table. So let me show you this trade. Now, for this one here, this is a trade I'm in, right? Now, if you notice the market break up, pull back, but pull back to the same point, right? So I get my double bottom trade.
Mhm.
Now, this is the double pin bar, okay? And then I enter here, enter above there. See, I'm in this trade. Now, this trade, I'm currently in, I'm up 85 pounds. And remember, all I'm risking here is 10 pen, 1 pound per point. So every move, I get a pound. So if I was betting, say, £2 a point, then this would have been twice that amount. If I'm doing £3 per point, every move, then I'll get, three times that. But I'm very conservative in terms of my trading because for sure I know, and the level I'm at now is that no matter what, provided, and the reason why I'm not up a lot more in terms of profit was because last week I did a £350 risk. Now, on a trade where and this was as a result because I've got this person who I'm trading their account, and because I just wanted he sent me through all the time, his statements in the night, and I just wanted to make a big money for him. So what I did was I said, you know what, this trade looked nice, and I put a £300, £350 risk on there, and I said, look, if I'm doing it on my client's account, I'm gonna have to do it on my account as well. And the trade just ripped me apart. Whereas my maximum normally is 120. Yeah. So you see, just one day when you think you know it all, but also as well in the last month, I made over 3.35%. So you see how because I was invincible last month, I felt as if I I couldn't do anything wrong. So but then ultimately I'm still at the conservative stage where if this account right was say £50,000, then you'd be looking at I'll be risking because I'm risking £100, I'll be risking probably £500 per trade, you know between 200 and 500 pounds per trade I'll be risking. And because I know that my strategy work, and I know I'm going to get back this money, and I know I've got a high probability of winning, then I'm not scared. But then when you know, once you've done your trading plan and you understand the strategies properly, then basically, you know, I would say, you know, when you do your first trade, you shouldn't be risking more than probably £30 per trade. Max, even if you can put in £100,000, right? Don't risk more than, £30 per trade, or even £20 per trade. Why I said £30 because sometimes the stop level that you would need to put in the trade, right, would be too much. Okay. So I would recommend that, you get that practice on the ability, get a feel of the market. Also as well, as much as I'm teaching you the key and the fundamental aspects of my trading, you're also going to look at it and say, you know what? I don't like taking the double top. I don't like, if I don't see an engulfing and a pin bar together, then I'm not placing the trade. Look, we've got this engulfing here, right? At this zone. And you might say you're only going to take reversal trade with an engulfing pin bar. Let's say we could find an engulfing pin bar. Um, so we can find an engulfing pin bar. Okay, let's look at this one here now. Um, we had, well, this candle engulfed that one, but we had double pin bar. So if I just take this one off, I got into this trade and made money on this one, right? So here we've got this pin bar, then we've got another pin bar. So you could be saying, look, if at these zones, if I don't see, for example, because remember now, this is a sideways market. So every time the market comes up to here, comes up to there, comes up to there, it goes right down. If you don't see, say, two pin bars where the bears have lost, then you're not taking the trade. So while we're going and while I'm explaining all of these things to you, you're going to have to identify with something that you're going to want to do all the time. Nothing at all, right, will stop you from doing that. Make sense what I'm saying?
Yeah, it makes sense. So it's kind of like finding a strategy that you're comfortable with, really.
Yeah, but you also need that confirmation, and sometimes you need that affirmation that said that look, it actually works, and you want to feel good. But for me, before, let me tell you, you used to see all sort of manner of indicator on my chart, trying this, trying that. And I've just noticed that, look, we get the pin bar. Look, I took this trade here. Is anywhere, as I told you, anywhere you see that vertical line, I took the trade. So I took this trade there. I took this one there, made money on this one, made money on this one. Took this one now because remember, look, it got to this point, got to this point, got to this point, got to this point. I got this here. I got that pin bar. Can you see that nice pin bar, right? Can you see that nice pin bar? Can you see the
Yeah.
pin bar there? This one here.
Mm-hmm.
Now, when I got that pin bar, I entered there above, triggered into the trade, and then what happened was it went up to here, and then when I saw this reversal pin bar at this zone, I said, no, no, something's gonna happen here. So what I did, I just moved it to break even and got stopped out. Okay, so I didn't make any money at all on this one, and then the market just dropped. Okay, and then since then I haven't seen any sort of trade, but I did say if the market then breaks down and come back to this zone here and I get the right signal that I'm looking to sell because this market is going to go lower. Then I said, okay, then since the market now breaks above now, which is this zone where it has touched in the past, I said, okay, if it comes down to here, yeah, with a nice bullish engulfing our pin bar, then I'm going to buy. However, this candle was too big because look, it's taken all the way up to this zone, so there wouldn't be much profit. And and to see exactly what happened, the market turns back around. So I didn't take the trade there. Okay. No, I'm saying, okay, if the market then breaks down nicely, pull back to this zone, then I'm looking to buy there. It did that, but yet still this candle was just too big. And also I would have to put an entry above there with a target there and a stop loss there. That's just not enough. That's not good enough risk reward. Yeah. Okay, let's show you this one now. So this one here is the the euro USD. Yeah. I I took a trade there, made money on this one. I was waiting for it to do this. Either pull down to here, yeah, and pull back up to there. But anyway, that it didn't pull back up to there. It went all the way down to where it was in the past. Can you see? You see the structure of the market. Why we use supply and demand zone? You can see the structure of the market always leave clue. If you notice, the market does the same thing. Every time it goes to there, those buyers and sellers will always have memory of where it was in the past. And that's the reason why, for me, I put the supply and demand zone on my chart. So therefore, I know where it's going to go. Because all of these zones are going to place it where it has been. And I know a lot of times when, people might look and say, why are you putting some of the lines? Why bother every time you're going to put a trade on, you put the supply and demand zones on? Because what a lot of people will do, they will then try and create zones, right? Doesn't that the brain want to see. So because I don't want my brain to see zones that I that the brain wants to create to give me a trading signal, I make sure that I put those zones which it's the same zones that you're going to put on 10, in 10 months time anyway. So for me, putting the zones on from now is really important. So I don't have to be having that as one of the things that I need to do. Okay.
Yeah, I understand. Marla, the first trade, why did you necessarily take that trade? Because it's not a pin bar, it's not an engulfing candle, and it's
Um,
not a mixing candle. So
okay.
what's
Let
the
me let me
signal?
see. So which one was it again? Which
The
this
first
this one
trade,
here.
that one
So this one here.
there.
Okay. Now,
It's not.
so remember
But
now the
what's the
market breaks down, pull back,
mm-hmm.
break down, pull back. So this is our what now? This is our first touch. Break down, pull back. That's our second touch. That's our third touch. So now this is now the market now showing me that it's in a range.
Mm-hmm.
Okay, so I've got this big bearish candle. Okay, and that's the
Mm-hmm.
reason why I took the trade. The market then break down to this point, pull back. Yeah, I got a looking pin bar here. I got an engulfing candle here. That's the reason why I took this trade. Okay, now the market then break down. Then when I saw this candle here, when I saw the market then come back up to this point here, I just thought, well, you know what, let me get out of this trade. I don't think it's gonna go down. Yeah. So I got out of that one. Yeah. When I saw again now, when I saw this here, another bearish candle again, I took this trade and it didn't trigger me in, but when I see it taking forever, when I saw this really nice, massive engulfing, bullish engulfing, I thought, well, this thing is gonna go back up. So what I did was I got out of the trade, but then when I saw this bearish candle here, I said, you know what, let's enter again. So I put as entry there because I know this thing was gonna go down, but when I wasn't sure, quite sure when. So then that one wasn't triggered. Then what happens now? I said, okay, then the market then breaks down to this point here. Now I said, okay, if it comes back up here now, then I'm selling because every time it hits there, hits there, hits there, hits there, I know it's gonna go back down. But then I didn't get any signal whatsoever apart from this one here, but because it's just making that sideways movement, I didn't get it and I didn't get in at all, so I didn't make any money at all on this. But then what I was expecting was for it to come back down to this zone where it has been going. So I was saying, okay, if it goes down to this zone here and pull back up to there, then I'm going to sell. And I'm saying, no, if it then basically break up, pull back to this zone, right, and give me a double bottom there, then I'm going to buy. That didn't happen. Okay, because remember, it's the same thing, it's the same way I'm doing it all the time, right? Now I look again and said, okay, if it breaks down like this, pull back up to there and then pull back to this zone, yeah, and give me that double bottom that I'm gonna buy if I get the signal. I didn't get the signal. Okay, now I said, okay then, so there wasn't anything there, so I missed out on all of this move. There's a possibility that I probably need to start thinking about another way to get into some of these trades. However, why should I basically, when I've got strategies that work. Because I won't get all the move. If this basically had pulled up a bit further up to this point here with a nice bearish engulfing, and if it wasn't just sort of sideways like this, then I would have probably got into the trade, and I would have probably made this profit all the way because this would have been my target. Yeah. Now let's show you another one. Okay, let's look at this one here now. No, I haven't taken any trade at all in this one. Okay. Now what I'm looking for is the market breaks down, pull back. Okay, so the market has made these lows at this point, right? Then the market break higher than this high here. As this high was higher than this one. Market break down, pull back to the no. So the market sort of just moving within the sideways market, right? Now I know that every time the market comes to there, comes to there, comes to there, something happens. So then that's the reason why I'm looking for the market then to have some sort of consolidation for me to buy going up. Now what the market has done, a number of people have actually bought, right? And the people who have bought in this market has been stopped out. This candle here, it's showing here that the market dropped by just 6 to 1 pip really to stop out these people, okay, who have probably bought, yeah, and expect because this is where I'm expecting this market to go. I'm expecting the euro to go back up to this zone, okay. Okay, look at this one here now. The market breaks up, the market pull down, break down, pull back up, and that's the reason why I got this pin bar plus this engulfing. No, sorry, I just got the pin bar only, and I took the trade. Yeah, with a stop loss of roughly, it was £90 I was risking on this trade. Yeah, to make £170. This one here, I made money on this one as well. But you know what? I'm telling you, I'm feeling so like mad because I missed. This is where I took my profit. I got into the trade there. That's where I took my profit. No, actually, I took my profit there. 145. But look at the but then you don't know what's gonna happen really. But one of the ways I could overcome this is probably put on 2 lots. I could probably possibly put on 2 lots on probably possible put on 2 lots of trades on this on 2 lots. So when one comes off, so at least you're in the money, and then when the other one comes in, then basically you carry on going down. But this is what caused me to change my mind on the trade. When I saw this candle here, this bullish candle, then what I did was I just moved my. This was where my target was. When I saw this bullish candle, I said, you know what? So then I just basically move my stop loss from up there to about there, so I secure my profit. And then this candle came back and stopped me out. So then
Oh,
just giving me £160 on this one.
so
Um,
when you said that where your target was,
yeah,
um, did you put your target there because it was close to the demand zone that it
yeah,
stopped at
yeah,
previously,
yeah, yeah.
or was it overly cautious, do you think?
That's no, the reason why I put it is because look, if you notice here, this is a major zone. These zones are all zones that we know, right? But we look for that major zone that we can see with our naked eyes on the chart for that region for that period of time, right? So if we look
Mm-hmm.
here where we got this horizontal this sort of slope line that says the market comes there, pull back, comes there, pull back, comes there, and then so I was expecting the market to turn back around that point because look in the past you can see it was there, so the likely chances that it's going to come to this zone and then turn around. So that's the reason why that would be my target. But also you can see the market break down, pull back up to this zone, and this is one of my favorite specialty in terms of that double top trade where the market breaks down, pull back, give me an engulfing or a pin bar combi candle, and then I take the trade. But then this trade here, I even though it's an engulfing sort of, I probably wouldn't have taken this one. Even though it's at the supply demand zone. This is probably the one that I would have taken because the market look, because this is a typical now where the market now start that's higher high, you know, higher high, higher high, but then this high is not as high as this one because this is where you would expect this high to go, yeah, up to that region there. So it's higher than that one, but that wasn't the case. But because we can identify with it that it's in an uptrend I could buy, we're looking to buy there, we're looking to buy there, and so on. But I'd missed all of those.
But
Okay. Yeah.
wasn't that when you said that you wouldn't have bought there at that big candle there.
Say that again.
Was it that time? You just said that you wouldn't have bought at the I think
Let's show you where. Just
um,
tell me when to stop. Yeah.
the top one,
This
top
one. This one.
the
That one.
one to the left. Yeah.
This one.
So you said that
This
you
one.
would have, yeah, that one there. You
Yeah.
just said that you wouldn't have bought that trade, but
No, no, I wouldn't have sold. I wouldn't have sold.
wouldn't have sold, sorry. So you said that you wouldn't have sold that trade, but wasn't that the same kind of signal on the last trade
This
that
one
you
here.
said that you hadn't sold?
Yeah, but
No,
that's this one here.
no. Do you remember the
This
last
this
chart?
this one. This one here.
No.
Was it this? This was the last chart.
Okay, maybe it was the chart before. Sorry.
Okay, let's go back. That one.
Um, this one, this one.
This one.
So do you see where? Yeah. So you see where you've done your first trade there,
There, yeah.
first red line. Yeah. So isn't that pretty much identical to the other one?
But let's
Oh,
look
okay.
at look at this
Was it
region
the same?
here, right? If you look at this region here, can you see this touch, that touch, that touch? So we've got lots of touches in the same area.
Same area. Okay.
Yeah. So it has to be the same touch in the same area. So let's go to this one now.
Not made any
See, same touch, same area. Yeah.
Mm-hmm.
Yeah. So look, same touch, same area.
Okay.
Yeah. Because you know we could have also taken a trade like this one here as well, because the same area as a double top. But then what would have saved us here is the fact that we didn't get like an engulfing or a pin bar. So that would have saved us there. Okay, so this one now, if you notice here, if I sort of show you here now, um, if I did this, you can see that the market has just been in this zone, right? It goes up to there, comes back down to here, yeah, then goes back up to this zone, then come back down to here. So I'm looking to buy there, okay? Because look, here, 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 okay? Now I got this pin bar, I've got this engulfing. Now I wasn't triggered into, I'm not triggered into this trade yet. Yeah, but that's where my stop, that's where my entry is. So the market has to come and break above here for me to be triggered into this trade. I'm targeting the previous high. Now the previous high is there, the next high is there. Okay. However, the supply and demand zone is there, so I've got to also be mindful. So if the market moves up to this point, then I'm going to take this and I'm going to move my stop loss to break even. Just like, in this trade here, what I've done, I've moved, now I can't lose on this trade now because I've moved my stop loss to break even, right? So you see this, that red line, that this was where it was before. Now that I'm up nicely, I've moved my stop loss to break even. So I'm going to let this trade run and run. There's a possibility that this trade is going to get to that point and then turn back around. Okay, there's a possibility that it might even run all the way up to there. But what I could do is, say for example, this market is moving up and up. I could then leave my stop loss to say there, which is 2 to 1, and just basically, and then say, okay, then, right, whenever the market comes back and take me out, take me out. Oh, it's all the way up to there, I move my stop loss there. So all the way up to there, I move my stop. You understand? So you're just moving, and just letting the trade run and run and run. Yeah. Um.
Yeah, that makes.
Yeah. So here now, I was looking for this market to, because look at this one now. The market breakdown, pull back, breakdown. We get a pin bar with a nice engulfing at the zone where the market has been in the past, right? I missed out on that one. But then anyway, the market breakdown, pull back up to this zone. Look, see, look left, structure leave clues, leave clues, leave clues. Yeah, we could have taken this one because we got the engulfing, right? And we've got the double touch there. Make sense? Yeah,
Yeah,
because this is
makes
our double
sense. Yeah.
top, right? Breakdown, pull back, breakdown, come back up to this zone. No, this is the third. This is the third touch now. So I was looking to sell. I lost money on this trade because what happened, I put my entry there, but this candle here triggered me in. If I couldn't have really done any better on this one. So this candle here triggered me into the trade. I got stopped out, lost £100 on that one. Okay, then the market then shoots off. Now this one I wouldn't have taken, but this one I would. But because this was this would have been a big this engulfing here was too big. This I would have been risking roughly nearly £200 on this trade. So I just gave it a miss. So far, if I taken this trade, I'll be looking at 140 pips in profit because this was where I was going to take it. But I said, okay, then I missed out on that one. If it comes down to here, then I was going to buy. If it then basically sort of rally back up to there, then I would have sold. Okay, but this one I lost on that one. But then, this one I didn't take. As I said, if you see, anytime you take a trade, you got to practice. Like if I took this trade and I put this on, so I know I've taken the trade. But this is where, can you see, could have taken this one here. But the reason why I didn't take this one, because the risk reward, this was too massive of a candle. Because this is just, this is nearly, if I was doing a pound a point, I would have to risk nearly £300 on this because this was a massive move on the GBP. You know, let's make it a bit bigger. Say if this was a pin bar, well, not quite a pin bar, but it's it was something similar to this one. So, but then the market moves on. So I already knew that I was going to take a trade there. Now I said if the market then comes down to this point, and then I get the right signal, then I'm looking to buy there. Or there's a possibility where the market has gone before. This is where this market might turn around. Okay. But for some, not every trade you're going to take. You're going to try and take the ones that are going to give you the best risk reward. Okay. Now I'm looking. I was saying here, this market, if the market had gone down to here and then pull back up to there, because I've already missed out. I missed out on that one. Okay. Because this would have been a really nice one there. But anyway, I said, okay, I'm looking to buy there. Didn't get the signal. Market breakdown. Pull back up to this zone. If it pull back up to this zone, then I'll be looking to sell. I said if the market gave me that double bottom there, then I'm looking to buy. I didn't get that signal. Now the market then I'm looking for it now to break down to the previous structure here at this demand zone. If I get the market break down, pull back, break down, I'm looking to buy there. That's as simple as how the trade is. Okay. Now here now, can you see the touch there? 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 Now I'm
Yeah.
looking to enter into this trade right here. Okay. So I'm looking to enter into this trade there. Now I've got this engulfing. I got the engulfing there, and I put my entry there, but I wasn't triggered, right? Okay, so I wasn't triggered. So I say, okay, then let's give it some time, and and see what happens. So I got there's another engulfing today, so there's a possibility that I might get triggered into this trade. Yeah, but the market has to come to me. I'm not going to chase after the market, so I'm just waiting for this one to set up. Okay. Now, I got into this trade, right? Took this trade here, went up there, saw this pin bar, so I thought, well, it's going to turn around. That's what it did. I just scratch out for break even there. This one here, I I basically got in because the market gave me that double bottom, okay, and I got this little pin bar here. I just thought, well, you know what? The market went up, came back, stopped me out. And then look what the market did. Got the engulfing there. Got the engulfing there. I got in there on the trade. Um, this was the candle that triggered me. So I was good. I took it. Got this really nice trade here because I just sort of put my target there and then took profit. But look at this nice move the market. Then I said, okay, then because the market is now in this range, if the market comes up to here, then I'm looking to sell. Yeah, if it comes back down to there, then I'm looking to buy again. But anyway, now the market then did this now. I said if since the market break above this zone where it was before, market breakdown, pull back to the previous zone, then I'm going to look to buy there. That didn't happen. Just carry on moving up. Okay. Here now, I I look to buy here because, but anyway, I was looking to buy there. I probably should have taken the trade. I probably should have taken the trade here. Because I didn't get this one, I got the engulfing there. I didn't take it there, okay, because I already set up the chart. But anyway, here's where the market moved down, pulled back up to this zone. I got a pin bar, and I was looking. Actually, I got stopped out. This trade I should have taken. I should have waited for the market to come up to this zone, but I took it there because I got the pin bar, and I was just there scratching for trade. Here now, I'm waiting for this market to then come down to this zone, pull back up to this zone. If it does that, then I'm looking to sell. Now, if you notice here, right, with this one here, the market breaks because the market is making, higher lows, right? Then I was waiting for this market then to break up to this point, pull back down to this zone, right? And it pulled back down to this zone, and I'm looking to buy. That didn't happen. So okay, then um, that's one potential way to trade it. And if the market does actually not break down, then pull back up to there, then I'm looking to sell. That didn't happen. So yet again, so what we're doing is we're only trading the same strategy by putting it on the chart. If we don't see it happening, then we won't take the trade. Is it making sense?
Yeah, it makes sense. Makes sense.
Okay, it does it seem simple to you? Because another thing as well, it needs to be simple. It needs to almost okay, right? That's what we're doing.
So it seems simple when we talking through it, but then when I'm kind of doing it by myself and doing the homework, it doesn't seem so simple.
Well, don't worry. It was like that for me, and it's actually when I how I sort of got over it is the more I start putting them on the chart, the more I put them on the chart. Because look at this now. I made money on this one, made no, got to break even on that one, lost money on that one. I got this because if you notice here, the market then was like every time it comes down to this zone, so it's like in a range one, right? So this one I sold when I got this engulfing, came down to here, and then I moved my stop to break even. Then it came back. This one here stopped me out, okay? But I made a nice money and made a nice little money much on this one when it pulled on all the way down to here. Yeah, because this was my don't my first touch, but this was my second touch. This also gave me the confirmation over there as well. Can you see how the past predicts the future? Can you see how this here reacts there, reacts there? And look,
Yeah.
if you notice here, the market breaks down to here, pull back up to this zone, break down to where it was before, then go back up, break down. Then normally what would happen? It would have come back to here and then mess about here first before moving back up to there. Then it comes back down to this zone, then pull back up to the previous zone, then come back down to this zone, pull back up to the previous zone, come back down again, pull back up to the previous zone, and then come back down to this zone. And then I thought, well, you know what, it's going to come back up to here. But unfortunately for me, this is just one, two trades extra. But I didn't put a big risk on this one. This one I only lost I think what £39 on this one because I thought, well, let's see what happens really. And
So,
yeah, carry on.
all right. Why didn't you buy at the second touch there, the double bottom?
This one here.
Is it because it
This one here.
no outside of the blue, go all the way to
This one here.
keep going to the left.
This one here.
Okay, keep going down. So
This one.
at the lowest, yeah.
This one.
The next year. Why
This one here.
didn't you
No, I would not
no
bought
no no
there.
go back
This one.
that one because it's a double bottom there, isn't it? Or is it
Um,
because it
the
didn't go down
reason,
to
yeah,
the
the
nine?
reason why I probably would have taken this one, it's not on my chart. There's no supply and demand zone on here. If I don't see a supply and
Okay.
demand zone there, then I'm not doing it. Now look at this one. This is the one that I would want to take. I would have taken this one if I'd seen it. Because you see,
Okay.
I've got my engulfing here. Yeah. So this is the one that I would have taken because I am confident about my supply and demand zone for the turning points in the market. So that's the reason why I would have actually taken that one. Yeah.
And that wouldn't have been a double top because they're not close enough. They're not
Well,
touching.
this one would have been a double top here because the market break down, pull back to previous zone. Okay. So then it's almost now it's in a downtrend, but the fact that it breaks down and pull back to the previous zone where it was, then sorry, that's almost like what I'm calling the double top there.
Okay.
Yeah. So that's what so that's what I'll be thinking of there. So I've sort of gone through and show you like sorry.
Gosh, you're not well today, are you?
Oh, the A fever is killing me.
Oh
Ah,
no.
yeah, it's always that's the reason why I don't like when we get to the hot season. Yeah, so this bit here now, if you notice here, the market's just been in a range, right? I took this trade here, expecting it to go back up. This one, I got lost on that one. This trade here, I made money on when it get up to this zone, right? Here now, I could have actually taken this trade because the market break down, pull back to the same zone. I got the double pin bar trade here. I could have taken this trade. I wouldn't be making much anyway. But I was in better trades than this one, so I probably wouldn't have taken that one. I haven't set up that chart yet. And because I've got so many markets now, because I've got students left, right, and center with all of these, and I said, every time my student says, Marlon, check out this chart for me. What do you think? So I just said, might as well just do them from now. This one here, right? The market has been in a sideways. I lost money here, scratch out for break even, lost money there. Um, Now, however, if this market then pulls down to this zone, okay, then I'll be looking to buy there. Okay. But then, as I told you before, right? Because I've seen where it comes there, goes up, comes there, and it's just, if you know, it's just sort of gliding, gradually gliding down and down. And, and because I'm getting those engulfing, then that's the reason. This is almost like this another strategy I was looking into. We got this double bar, which sort of takes me up to almost making this into like a three. No, let me not even say that. We don't want any sort of trading like this one. This one shouldn't have been taken at all. This one can possibly, if I get an engulf in there, then I'll be looking. And this one is coffee. I'm not sure what people think of coffee anyway. Copper. This one here made money on this one, right? Because I got this pin bar, right? Got the pin bar there, took the trade there. Yeah. When the market came back up, fortunately for me, it didn't, when I saw this, it didn't stop me out, right? But then I got a second pin bar there. I got this, bearish candle, made money all the way down to here, right? When I saw, well, actually, I only made money down to here because when I saw this bullish engulfing, then I jumped out of the trade because I thought, well, this thing is going to come back up. I need to pull my profit. I see, nice. I was up when the market went all the way down to here because this was where I was targeting the next move. Here now, I got into the trade there, and because every time I come down to the zone, I got this pin bar right at the zone, and I said, okay, let's get in. So I got into the trade. Um, when it came up to here, I moved it to break even. So therefore, I wouldn't like be losing. Just like this trade that I'm in, I'm up 91 pounds on this one. And I said, because I don't, and then this one here came and stopped me out. So I didn't lose anything. In terms of probably I made like a pound something because it came and took all the profit. And then it went up back because this was where I was going to target for it to go back to. But it has been in a range there, so I've sort of had a look at it. This one here, bought here, I just got out eventually because bought there, market came up to there. Um, not much money made, and then look at this one here. Let's just make it a bit bigger. Um, because you come down to this two zone here, I got the engulfing there, got the pin bar there. Because these are trades because it comes there in the past, comes there in the past, come there in the past. So I'm just looking, if you notice here the market breakdown, pull back, I could look at the double top there, here. So, with a little pin bar there, but I've got lots of other better trades that I could take rather than this one here, which is just, not making up its mind. I've got too many markets. No, this one was my nightmare. I lost a lot of money on this one, and because I lost money here because these two gave me the double top. And but then what I didn't realize on this one This is where I lost. All most of my other trades, all of them have been really good. This is the only market where I've actually lost money. This is where all my losses have been over the last, I would say, 3 months. And I'm thinking now to probably get it on my chart, but I'm tempted not to because there will be other opportunities. So if you look look at this one here, right? Um, the what had happened on here? I didn't realize that Donald Trump and because with Iran supply a lot of the oil, a lot, because when Obama lifted the sanction against Iran, then Iran can now supply as well. And because Iran wasn't able to supply and in the past, then the amount of oil that's exposed to the market, there wasn't enough because you've got Saudi Arabia and those other people and so on. And you've got Venezuela and other countries like that, and who sort of produce their own oil and so on, and Russia. But then with Iran coming on the scene, it sort of made it a bit cheaper because they've lifted the sanction on them and they've got lots of oil in reserve. So then when Donald Trump come and said the Obama deal with Iran is just rubbish, and he's not going to be an American and blah 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 this, then if he's going to sanction them, then their oil supply they'll turn it off so people can't. If anybody should buy oil from Iran, they'll be in trouble. They'll be sanctioned by America. So because they don't want America to sanction them, then what they end up doing, they don't buy oil from Iran. So then that will then make the amount of oil supply becomes less. And if the oil supply become less, right, to the market, then they're going to be more demand. So therefore, that's going to make oil prices go up even further. But then with all that is fundamental. No, I'm not a fundamental trader, so I don't care what they're saying. But because Donald Trump talked too much and he's on Twitter all the time, you've got to also be mindful of him because normally, normally you only get the U.S. president or like people from France, the president of France, because those are like the major player, and Mario Draghi, the European central banker, and you've got the Australian interest rate and so on. There's not much major event on the GBP interest rate and Great Britain interest rate or the GDP gross domestic product of the individual countries. So there's not much that can actually cause you to be worried. But anyway, I just decided, look, you know what? I went into this trade with a 350k. What I was doing, I was hoping that the market would come, and I just said, I want a bit more money on my holiday. So I was looking for it to say come back to this zone. So I put with a sort of entry looking for roughly about 350 risks to make about £1,000, and I can't believe I've had so many other big nice trades, and of all I took this one, and I'm not sure, and I think there's something in this one where we call this a revenge trading. We call it revenge trading, and why it's revenge trading because I lost there, I lost there because of these double top. And then you're just waiting because you're waiting that look, you know what, you stabbed me, yeah, in the back, I'm coming back for you. I'm coming. I'm waiting patiently, but I'm coming back for you. And then you end up making the wrong choice. So sometimes what you've got to do, you've got to leave the market alone. Just leave it because there will be opportunities, whether it be in the opposing direction or the direction that you are going. So just leave it. Let's see this one here. Didn't do anything on this one. Um, didn't do anything on this one. Oh yeah, I took a buy on this trade, right? And this one, oh my God, this would have been at least £1,000 I would have made on this one. And I got up the morning, I got in there. This is the candle I got in, right? I was risking £150 on this one, and this was gonna be my target, right? Anyway, Donald Trump came out this day and said something. This was in the morning. I got up and I said, you know what? I'm not risking this. And I basically came out of the trade. So then, because I was so gutted and disappointed, right? I saw this candle and thought, well, this is an engulfing. This is where the zone. Yeah, I'm gonna go into this one. And I said, you know what, let me leave it. It came. I would have been triggered and I would have been stopped out. So I would have lost on this trade. Fortunately for me, I didn't take it. But the sad thing for me was the fact that you know I've allowed what Donald Duck is saying. In terms of every time he comes out and tweets something, then the market just shoom, and then look at what happened. The market went nicely, which I should have just left it because look, the market was there, the market was there, the market was there. Just follow your rules, just don't worry about the fundament. Of course, if you know that the non-farm payroll, which is the one major event every month, the interest rates, Mario Draghi is speaking about quantitative easing. If those things are going to happen, then you stay away from the market. If I'm already £90 up in a trade and I move that to break even, then I know I just leave it. I don't have to worry. Now here's a trade that I'm looking. I'm saying no, this market, no, wishing away around this zone. Now I've put to sell this market. I put to sell this market. Didn't get triggered into it. I've got an engulfing. This was forming a pin bar there. It hasn't been formed yet, but because this market closed earlier than normal, that's the reason why I sort of put it there. The FTSE, yes, I got this trade here. Didn't get triggered into the trade, but when the market comes down, pull back, I didn't take that one yet because this would have been a nice one to take. Pull back up to this previous zone, got the engulfing, put the setup on, didn't trigger me into the trade, but then look at that nice move up. And then I was just waiting for it to do this, waiting for it to do this, and it hasn't done anything. It's just been just going. Yeah, so look at that nice move all the way up to there. Really nice move. So that's it. Any question before I go?
I just have one question.
Yeah,
Just back to my homework.
yeah,
Um,
yeah,
I'm thinking
yeah.
the second chart, so the
This
UK
this one,
100.
this one,
1 second.
or this
Yeah,
one, this one.
yeah, this one.
Okay.
Okay. So, do you know when do you know how I've got that line from the high all the way down to the low below, the long white
Yeah,
one?
yeah, yeah.
So you said that you probably would have done the line down to where
This zone here.
down to that zone there.
Yeah,
Okay.
and then
So if that but then if it was less than say 400 pips, would you still have done that?
um, if those say I would say nothing less than a profit target of probably 250 and above.
250.
Yeah, yeah.
So if so where the demand zone is there,
This
that
one
you
here,
would have
this
put
one,
that
this
down
one,
to.
this
Yeah,
one here.
so
Yeah,
if that move was less than 250, you would have done what I did. You
yeah,
went
yeah,
all the way
and go
down.
all the way down. Yeah, because the
Okay.
market sort of break down, pull back before even going further. Because we could have seen that this market now decided that it looks like it's going to turn around. Yeah, but this high, this is correct though. Yeah, that's a low, that's a
Okay.
lower low, this is a lower low. Yeah. No, what we were looking for is the market because the market was going down, right? So then market breaks above this one. But what would have been nice to see the market then break above this low here, yeah, break above it and this lower high, and then pull back to it, and then we're looking to buy there because then there's a
Mhm.
change in the direction of the market. But that didn't happen; it just dropped like then it break up. They were looking to sell there, which you did. Yeah, so that's fine. Okay. Now, what you were looking for is the market to break down and then pull back to the previous zone. So you were looking to buy there. However, if the market then say, because sometimes the market won't make this big move, the market will then sort of break down slightly because the bulls and the bears are in fight with each other, pull back up to this zone, and then you'd want to probably take a reversal trade there. Okay. But then possibly a better trade would have probably to wait for it to come back down to this zone, to then to look to buy again to take it up even further above this zone here.
Okay.
And this one here now, this is more range bound. So just always look where you see if the market is not making higher highs, it's like it's not going outside of that zone. It's just within this zone, so we
Mm-hmm.
know it's a range bound market. Yeah. But then, did you sort of place any? Because when I said I wanted you to place live trade, right? This is what I meant, right? If you see at like this one here, this trade is already placed. So this is what I want you to do. I want you to basically put live trades on at the different zones. Say, for example, I've got this engulfing, right? Um, Candle here. Okay. I got a pin bar with another engulfing here. So what I'm doing is I've put this trade on, right? I'm just showing you something here. Now, this trade is what we call is a market order. Okay. And basically I've put the trade on. I'm just waiting for this trade to be triggered. And this I will only cancel this trade when if I see it just start going down that direction. Yeah. On this trade I'm showing you, and if you go, I'm risking £94 to make £194. I'm looking for 2 to 1. Yeah. Now, if as I said, if I had a bigger account size, then would have been 200. This would have been £200 to make um £400. So it makes sense. So until I put another, or build this account, further, then I won't be taking any bigger risks because every time I take big risks, every time I think this is gonna be the trade that's gonna break, is gonna break the bank, then I end up, doing it on the wrong one. So it's best if you're consistent, and if you're consistent. No, my plan is I would like, by now and I want this account to move to over. I want it to be at the moment it's 9,620. I'm looking for it to be over £10,000. By let me see where we are now. We're on the 16th. I would love it to get above that by the end of this month. So
Okay.
that's so. But then, if you think about having a bank account, and most banks in England now probably at best you get 4% on your yearly. Okay, so say if I can actually earn roughly 3 to 4% a month on £10,000, then that's far better than what the bank would give me because
Yeah.
at least it will be compounded. Whereas in the bank getting 4% for an entire year um, is not very promising. So my sort of thing is, so regardless if it was £100,000 account and I was getting 3%, for £100,000 a month, so if I can actually work and be getting 3% now a month on average, right? Because last month I made 3.6% last month, right? So if I can make that consistent 3.6% on a monthly basis on a simple little £8,000 account, right? And then I then consistently can do that now, and I see then if I've got a £20,000 account and I'm doing this 3% same way, and then I've got a £50,000 account, that 3% same way. Yeah, because even my stock trading last month alone, I made my stock trading account, I made just over £900, and that account was just over 4,000, so I'm up £5,200 on that one. And for that one as well, let me show you something on that one. It's for that one. So your homework really, let me just let me show you. The homework really is for you to just go through and place a trade accordingly. I haven't put on any trade on this in this because I've been busy trying to get over this A fever that's killing me. Let's look at Maestro, right? Um, See if you look into Maestro, right, for this month, for last month, this month, we're in the month of April, May. made a today's probably about the 10th when my last trade, with the 15th. So this trade, I got dividend on Centrica, made £161 on ITV, made £143 on SSE, and all these trades they're still going up. I made 240 to this one. Oh my God, I was so disappointed. But what I'm showing you here, you've got to pay like, oh, they call it libel rate, where you've got to pay interest when you've got trades open and so on. Now, sorry, this one here as well, the Ford, this one was just going up. Sometimes I just like I just get scared really. I get scared and end up jumping out of the trade. You have to pay daily interest on these things. Yeah, so this this is this is the sort of thing that, and with this, with this sort of thing, right? What you've got to do, you've got to be patient, you know. And I literally I've left lots of thousands of pounds on the table a lot of times, because sometimes when you're looking, you think, yeah, it's going back, but then all you've got to do is move it to break even, and sometimes just let it run. Because if I say, for example, go back to um this, which one of this? Say if I go back to say look at even this one. When I got out of this trade, it was like five something. It went up to nearly 800. And all I did for this trade was I went in at £2.50 per, £2.30 per point. I risked £100, you know. And sometimes you think, let's try and preserve your capital, but that's the main thing anyway. You always try and just preserve your funds. That's what you always try and do. But your homework really is for you to just basically just set up the chart, put trades on at the demand and supply zone, using the double top, using the first touch, using the second touch. That's really what I would like you to do. So you're getting a feel of it. Because next week now we'll be looking at the trading plan. So while you're doing the trading on a weekly basis, doing the different strategies, then basically we will looking at the trading plan for the next 2 to 3 weeks. Yeah, and then basically what I would want, so next week and then the week after, I'm going to be have a half an hour session with everyone talking about the trading plan and reviewing the trading plan, because the trading plan is all about, what's at the risk level, how much money you're willing to risk in the market, and basically writing everything down, how much money you would like to be making per month, and so on and so forth. Yeah. So for this week and the remaining time we've got now is to start putting live trades on. I've actually gone through all the trades that I've taken over the last probably 3 months, by going through all the charts and showing you all the trades that I've taken. And all you've got to do is just look at this video, see the trades, look at your charts, make similar thing, look at the video that we did last week, and see how we went about it. Yeah, and we're consistently doing the same thing over and over. So therefore, when it's time, and even when you're ready to go into the real market, I would suggest never, ever, ever, ever go in big, because the market will be here the market will be here until this world come to an end. Yeah. So the market won't run away. And also as well, when you trade as well, you want to have multiple income streams. So therefore, you're not totally reliant on trading, because that can also be a negative effect. Because if you're totally reliant on what your trading account is going to give you, then you'll end up sometimes going to trade that you shouldn't be going into. So you don't want to have to compulsory put a trade on because you've got your mortgage to pay, or your council tax to pay. You don't want it to be like that. You want to put a trade on because your mind is clear, your mind is fresh, and it's 100% to your trading rules. Okay. So anyway, guys, enjoy the rest of the evening. And
Marlon,
yeah, and then basically, yeah,
before, so before you go, so could
yeah,
I ask one more
yeah,
question?
yeah. That's
Could
fine.
you
Yeah.
go back, could you go back to your screen?
Okay.
Okay, that one right here. So just going back, just to clarify, just going back to what I was saying before. Do you see
Yeah.
that high there in the middle?
This one.
No, no, no. The
This one.
high. No, next one.
This one.
Yeah, okay.
Yeah.
So do you see from there,
Hmm.
down, if you go down two demand
There.
zones,
Yeah.
that bar?
Yeah.
Okay. Right. So I was just wondering, so how many pips that was. So the reason why I didn't identify that as a move was because it's less than 250 pips,
Yeah.
basically.
Yeah. Yeah. But also, nothing is wrong with you doing this to say, well, the market moves down to this zone, okay, before then moving back up to this zone, okay, and then move down to here. Now remember, this is not me putting this on the chart. This is this is an indicator that's doing this just to help me to be consistent. Okay,
Okay.
this is not
But
me.
then you did say before, that if it was less than
Yeah,
250, you wouldn't
yeah,
identify it.
yeah. No, but if you look now, this move here is less than 250, so you wouldn't consider it. Yeah, this move here is less than 250. Yeah. So, but then you could say you want your moves in your trading plan. Yeah, you're considering a turnaround of the market if it does 200 pips. Okay. Now, if that's what you're gonna say, you've got to be consistent with whatever you're doing. Because remembering, as much as I'm teaching you all these strategies, right, which is really
Mhm.
it's just four strategies really, okay, and two of them overlap because you know where we've got the double top really, um, the, where we've got a double top, right? That's almost like either it's going to be a reversal trade, yeah, which is on the downtrend, or we've got a double bottom. That's like a reversal trade where we've got, we're looking at a market that's going down. So roughly, we've only got, if in effect, three different strategies really, yeah, that we've got to focus on. Now, what you've got to do is to make it your own. So therefore, you understand it, and the way you understand it, you've got to trade it. But then you've also need that affirmation and confirmation that it works by doing it first, demo it over the next couple of weeks to make sure that it's something that's profitable and something that works. Yeah, but and even when you move on to the live, as I said, don't go in guns blazing. You're doing risking your £30 or your £20. And then once you get in a feel of it, you understand it, and the more you understand it, so therefore if, for example, you put a trade on and it was a losing trade, then you won't feel any way about it because you know you've done it properly, you follow the rules to the T. Now, I know if this trade comes out and this trade is a loser, say it trigger me into this one, right? Come back down and stop me out, right? Then I won't feel any way. I've lost some money, so what? It's a part of the game. But then I know I'd follow my rules. The only way now I would have felt bad would have been right if I then say took a trade where it wasn't a part of my rule. I looked, if I basically went and say, you know what, I think this one here I'm going to sell there because I think it's going to go down further. But that was never a part of the way I trade. Of course, you've got some people who trade like that. If the market hit this zone, then they're looking to sell. If the market hits certain zones, then they're looking to sell. The market come to this zone here, they're looking to sell because they think the market's going to go further because the market started going down and it's in the direction of in which the market is going. So for example, so some people, because we all trade differently, but then as we know, this is a zero sum game. When I say zero sum game, that means that you have got to lose for me to win. Okay, or if I have got to lose for you to win. Yeah, so it's zero. So people are putting in, people are taking out. Yeah, and that's the reason why
Mhm.
even though there's this competition that I want to enter, but I won't have the time to enter it. It's like traders from all over where and they're looking for like some top traders. But I just won't have the time that I need to be trading in the daytime to be able to enter that competition. But there are all sort of opportunities out there for traders who are consistently making money. People are willing to give people money to trade. I've got this guy who sort of offered me something, but it's in London, and I would have to go down to London to trade. But the money is good, but I just can't leave my family and go to London. London is so expensive as well. And I was asking if I could just trade from home. They said no, they would want me to come into the trading floor and to learn and see what they're doing. I'm like, no, I can't give up my family life up here to go down to London. And also I love my teaching of my children on a Saturday. as well. So I wouldn't give up that as well. Yeah. So anyway, guys, enjoy the rest of the evening. Hopefully I've
Thank
answered
you,
all your questions.
Nathan.
And just remember psychology. That's key, okay? Don't forget that psychology because you make £1,000 today, you want to make 2,000 tomorrow. And then sometimes you might not there's no trade set up there, but you end up wanting to take the trade. So always remember that psychology will play on your mind all the time. There's always trying to spin your brain. And because our brain has to work slightly differently in trading for us to make money and to become profitable. Okay? Okay then.
Okay.
Yeah, good night. Yeah, bye
Thank
bye.
you.
You're
Good night.
welcome. You're welcome. Bye. Bye.